a viral something out of it, but no one, there's nothing viral about me. It'd be awesome. One time I did something about when I was cooking steaks. I did a YouTube short on the showing the steaks I was cooking or something, and that got more views than any other thing I've ever done. So anyway. All right, so let's look here at the actual charts and not at Max. Let's just look at Google Chrome. All right, here we are. Good old Google Chrome. Okay. Let's look at well, let's do this. Let's look at the charts. Gosh darn it, look at this. I just happened to open on TLT. Now, I don't know if you guys remember, TLT had traveled outside of the Valley of Death this morning. We were hoping for an extended visit outside the Valley of Death. But who knows? Maybe these guys adjusted their position. I just checked the website and not as of yet. But let's check the kind of the mainstream funds. That's kind of the black sheep. That's like in a family you have like a cousin that goes to art school in Paris. That's kind of what Tress is. It's kind of the misunderstood of the family. It's not that it's bad. It's just it's different. All right. All right. So, but here these are your mainstream. This is like a kid that goes to Dartmouth or something or wherever. University of Texas here in Austin. Lots of good colleges out there. All right. But these funds are more just steady payers. So these guys sold the 51.75 strike for $25. And right now, it costs nothing to buy it back because the market's at 51.92. So it looks like we're in good shape on the indexes, but maybe not so much on Tress. On Tress, we wanted the market just to keep dropping. The market for bonds, that is. All right. Gosh darn it. This is a face ripper. Look at this. I've been doing something all morning. I've been working on a new video all morning. I've got so many slides for this new video. I haven't even seen this yet. But I mean, my gosh. So this is making yesterday's action look like a fake out. You know, when it pulled back, that bad number came out. You know, though, after the bad number came out, it never really made much progress down. They never got a, but in any event, now it's reversing and going the other way. So who knows? Who knows? Leave me comments. Let me know what you guys think. I'll check the comments here in a little bit. But yeah, that's a face ripper. That's also going to be, I don't have the spread for SPYT on here. Going to be a full loss for the SPYT spread, but it's still going to be a big profit for SPYT fund. We'll look at how much here in a second. I won't forget to talk about SPYT today. In any event, so that's a full profit. They're probably all full profit. If S&P's that strong, they're probably all that strong. So here's what we need to remember for next time. Remember last night I was looking at this chart. This is the new smart money chart because this chart kicked it off. I don't know if I have it on here. This is the new smart money chart. I talked about it again this morning too. I didn't call it the smart money chart, but this is where the rally, this is where the smart money started buying. Now they've since come in and sold. But anyway, this just went crazy yesterday about noon. Just marched straight up. I mean, just a huge buy. Then even this morning pulled back a little bit and then rejected the pullback, but eventually came back and tested it again. And anyway, right now it's grinding. Yesterday it was chopping. So, I mean, it was going. So it started going a day before the market. So, and all this is Bitcoin. So all I'm saying is maybe Bitcoin's leading the market. Let's see what Bitcoin futures are doing right now. Bitcoin futures, 70 grand. God, it's a nice day here. All right, so Bitcoin futures have actually pulled back a little bit, but in any event, MST MSTR took off yesterday, and that's when I first started noticing, and now it's followed through to a lot of the other things. Let's look at Russell, see what Russell looks like. Well, Russell was the one that got hurt the worst by the economic number, The Russell's the one that's most sensitive to interest rates. That's what they always say anyway. So, but the economic number this morning, evidently, or whatever happened at 7:30, I'm sure is a number. I'm guessing it was a number. It looked like the markets accepted that, taking it well. So let's look here at Russell Cash and make sure that IWMY is doing well. Did you guys hear Panda's video this morning? There's going to be an IWM, a NEOS IWM fund, which is a Russell. NEOS, just to refresh everyone's memory, does monthly covered calls, but they do a great job. They pay around 12%, very comparable to JP Morgan, Global X, Bali, a lot of the other ones, very, very comparable. All right. But I'm excited. That should be a good alternative for people that want to get into Russell. The Russell does have some good diversity. There's not a lot of diversification between the S&P and the NASDAQ. I mean, but the Russell does give you some different stuff mixed in. In any event, same story on this, and this is well above its profit box. Barring something unforeseen, everything ought to be profitable today. I wonder if it's even possible that Tress might even be profitable. Let's just look at the chart of Tress itself. I don't do this very often, because these charts don't really tell you the whole story, because a lot of the returns from high yield funds come from the dividend, and you don't see the dividend in the chart. Just the opposite. You see the dividend come out on the chart, but you would think this is the worst stock ever just looking at the chart, and it's not the greatest, so I will say that. But it hasn't been so far, but it's a young fund. But it is popping today on the, it's popping on the fact that the volatility is up for TLT, because it's long volatility. So right here, I was looking at something today. All right. Yeah, this is the okay. So let's look at the buffer report. That's what I want to find out, is buffer report type stuff. All right, let's just look at this and see what's going on here. The 1-day index is okay. Well, of course, the NASDAQ's running away today, up 134 basis points. So nothing should be outperforming it. Nothing. Anytime the underline's up that much, that's why these underlines get so far ahead of all these high yield funds, is because the high yield funds, to all the differing degrees, have their upside cap. All right, but we can see who has it the least capped. And today, to be fair, JetQ was killing it, and also IQQQ, and also Triple QI, which is the NEOS fund. That's the one that IWMY is coming out with a stablemate for. But a lot of them are doing what, performing well. I mean, really nothing stands out, bad. I don't know what's going on with this. I don't follow SPYT that much. Maybe they paid it. Maybe they're ex-dividend or something. They're a great fund. I wouldn't worry about that one too much. But, the standouts of the day are definitely JetQ and IQQQ and QIII. All right. The recycling people came by, or it's the yard trash, the yard waste people. Okay. So this chart's been improving. We've been looking at these charts that were just since April, and they've been, a lot of stocks in the YieldMax universe, especially over here on the left-hand side, had been pulling back, but all of them have started going up again. So if you look at just April, I mean, everything looks great. PayPay looks the best. There's a lot of Maxi looks good. AMZ looks really good, and really, Nvidia's really tough to beat. The only bad one on here is Misty, and it's been good so long, it doesn't even bother me that it's pulled back so much. It's just, I don't know. Let me know what you guys think. I'll read the comments here in a second. So weekly, I think this is the same. This is since April. So in the indexes, this has been, a good time for the Defiance funds because the market's been real flat. Defiance funds offer a lot of buffer. We've already seen that one. 30 days is good for a longer term perspective. And like I promised before, I'm going to start doing a from January 1st. So that would be about 90 days now, and it'll go up as the year goes on. I promised I would have it done, but I haven't got it done yet. But I'll get that done. That'll be interesting. But this is our longest view right now. So on a longer term view, which 30 months isn't really, or 30 days isn't really a longer term view, these stocks trade daily options in lots of cases, or weeklies and monthlies. So they're pretty active trading. So, they get returns based on the option cycles, the monthly option cycles, or some of them the weekly and dailies. So I think it's fair to look at them on the shorter time frame. And on a shorter time frame, you wouldn't really have anything you were concerned about. I mean, even AMD's down, but I mean, what you going to do? It's down about what you would expect in relation to the parent asset. I guess other than hope it turns around, or monitor it, or I mean, there's some people that might want to be out of it. It depends on what your system is. Maybe some people have a trend following system, but anyway, AMD might be a good for a counter trend system for people trying to find value, some system that looks for the ones that are sold off too much out of these. But in any event, but really in all these, and a lot of these are just killing the parent asset. So that shows you, and the only thing they're doing different that the other ones aren't is they're selling options. So that shows you the power of selling options. Although occasionally when you see one like Goop that's getting killed by the parent asset, that's because they're selling options. They didn't get as much upside. And that's what usually happens, and you expect that. But still, if you look at on balance, there's a lot of great performance on here. Not much really bad performance. I mean, I'm going to give TSLP and TSLY a pass. They're doing all right. I mean, Tesla's just a sore subject. All right, let's see if you guys are leaving any comments out here. Hey, what's up, Tom? I appreciate you stopping by. Yes, I know it. I know it. Okay, well, I didn't see they had a chance yesterday to book the gains, but of course, I did see this morning's. I'm going to start following them more closely. It just got so boring to follow it. But so I quit following it. And sure enough, about the time I quit following it, I had to go back and look through my history. And luckily I did download the file that day, and I found it, and I reconstructed it, and I put it in option strat so we can, so yeah, I have right here, and option strat's 15 minutes behind, but I have right here, they could take it off at expiration for about 6, or wait. Let me see. No, they could take it off now for about 6, is what option strat is saying. And as time passes, it's going to be less. Anyway, it's exciting. This fund's getting exciting. So I started a portfolio in Seeking Alpha. They have a section where you can put a portfolio in there. And I've always wanted to have an example one in there. So I'm thinking that a strategy that uses half this thing, half TRES and half TLTW, or maybe half THTA. I haven't quite put it together yet, but half a real stable short vol bond fund, and then half this long vol bond fund. Anyway, just track how it does. And anyway, I think it's interesting, but I'm going to start tracking this more closely. But so let's look back here at but yeah, well, that's when I was trying to figure out what it was doing. That wasn't the sheet. This was the sheet. This is what they did originally. See this option right here? They got 600 contracts for $1, and they expire tomorrow, but it's the 90. Well, they got it for 96 cents. It's the 92 put. Well, yesterday I saw that thing worth almost $2. So, but now they have some losses from some of these other options, when they have a win from one of them. Anyway, but altogether, yeah, I'm showing they could pull it off for around 3,900. It depends. And they're also, I have mine set to give me the worst price on the fill. Like if I'm selling, I take so like if I'm selling, I have to sell at the bid and then I have to buy at the ask, just like retail should have to. In real life, some of these are spread pretty wide. And in real life, you don't maybe have to do that and you might get in and out a little better. I just want to be conservative on these estimates. But yeah, it should be real interesting to see if they take it off today or what they do with it today. So let me talk about SPYT a little bit. So um so SPYT, they finally did release the strike, so I didn't put them in here. I don't have this one updating live, but the point I want to make about SPYT is, okay, right here, I followed the last 10 days on it or whatever. Here's the spread by itself. When the spread loses money, which has only happened one day, it means the market's up huge. And the market was up huge. The SPY portion of the fund was up $85,000. The spread portion of the fund lost $4,000. So that ended up costing him a little bit of money. But on a most day, like on a day where it's a big down day for the market, like yesterday, the SPY portion of the market of the fund was down 84,000. Well, the spread gave it a $15,000 cushion. So today the reverse is happening. The spread's at full loss, but all we're rooting for is a close as high as possible. Because the further the close goes, because our loss, because we're only capped to a certain point. Okay, well, check this out. Trust. I should have done this before I got on the air. I've been busy working on a SPYT video, and I forget what I've done for the video and what I've done for the lunch show. But in this example, they sold options for 16 spot options. And I'm not going to worry about pennies because they cancel out. So it was the 51.80 and 51.65. Okay. So, let's go ahead and take a look at this. Come on. All right. Yeah, this is great to see. But hopefully it's not hopefully it doesn't just get rejected and run the other way. The bears got all excited right in here in this sequence too. And this one, it opened way down that day, and which caused a lot of losses for the high yield funds, but no follow through. Anyway, all right, I'll stop preaching. All right, so what this fund did, they always spread it 15 points apart. I'm going to try to zoom in here so we can see this on this thing. All right. I'm going to exaggerate the profit box a little bit. 60, 75. Was it 60 to 75? That's darn it. It was no, it was 65 to 80, dumbass. All right, well, it's easy to fix because 60, 65, we'll just roll this up to 65. And then, of course, you just have to add 15. You just have to know what strike they sell. Now, I don't know if they're always going to do 15 points wide, but 15 points is good, easy math. They usually get about half, too. They usually get about 7. So that means the risk is 15 less 7, which is 8. So the risk is just 15 less whatever you got for the spread. So in any event, today they actually got 6. They got a little less because it was 10 and 16 and 10. So they sold this near strike for 16. So they're short 16 synthetically. at that, they're short at that strike on this spread, but then they're long above it synthetically. But in any event, so the worst case scenario for them, this isn't a profit box. This is a inverse profit box, because a profit box, if you close at the top line or above, like QQQ or like JEPY is doing today with this conventional profit box that I have, which is part intrinsic, part extrinsic, that I've been drawing here for 3 months. But that's your typical profit box, because you either want to hit the top line or above. This, I guess, is an anti-profit box, or it's not really, because you want to hit the bottom line or below. But of course, that not for this, that just for the spread strategy, but for the overall account, you actually want it to be as high as possible. So actually, your worst case scenario, outside of a bloodbath on the downside, of course you don't want that. But on an up move, your worst case scenario, it's a small up move where it dies before your spread kicks in, because you're short. You're essentially short at 65. So any upside the SPX makes from 65 to 80, you don't participate in it at all. Now you got premium in return for that. So you got paid, but in a different manner. You won't get paid in the NAV. But the good thing is, above that, the NAV will kick in again. So let's look at, I didn't see them in the buffer report. Oh shit, there's the questions. Let me see. I'm going to check in with you, Thomas. Yeah, it was way worse than usual. Yeah. I appreciate you for watching, Thomas. How many other people are watching? Do we have any people watching? 8 people watching? Okay. Well, I'm getting ready to quit yapping and to get back to my video on SPYT. But while we're talking about SPYT, I know I have Google Finance and those fancy spreadsheets, but I sort of, no matter how hard I try, sometimes that buffer report pulls a number and it's not right. So I always double check stuff with Yahoo. So I want to see SPYT's performance today. It should be way up, and it shouldn't. I'm going to predict, I haven't looked all day yet, that it should be getting like 98% and 95%. Ideally, it should be getting almost all of the upside of the underlying, if not virtually all of it. Not more, because they've mortgaged a little bit of that upside. That's just what happens when you do covered calls. This is a covered call spread, but still, when you do anything like this, so that's going to happen. Okay, so they're up 56 basis points. That's nice. Let's see, just for fun, what JEPY's up by comparison. I know that I have a spreadsheet that tells me on the same thing. JEPY's up 47 basis points. Okay, and that makes sense because JEPY's a full cap. So that number will, if the SPX continues to go higher, that number, the difference will increase, because this one's capped. So let's look here at SPY. I just want to see how it would have done if you just had SPY, how much better just the SPY's doing. SPYT was 56 basis points. Yeah. So, and that's what Thomas was saying. It's not a great day, not a great day, on a comparative basis. I would not expect this. I would expect this to be doing better. Anyway, it's early in the day. Maybe the bid and ask can be wide. The market can misprice these. The market can run these ETFs at a decent size, difference to the actual NAV. So, I mean, that can be it too. It'll get corrected eventually, and they don't let it get too far off. But yeah, interesting to see. But yeah, that's not what you want to see. I guessed before I saw it, but I would have guessed the market's up that much. The SPYT should be up like 80 basis points if the market's up 90. Because it doesn't give up much. In my video, you guys watch it. I try to quantify it. It's kind of hard. It's hard to quantify how much it's like there's a tax you have to pay to get that, to get the income now. You have to trade something. And so no matter how there's different ways to do it, but no matter how you do it, some you pay on losing days. They charge you on different strategies, have different ways of realizing the loss. Anyway, I'll get more into it on my video. All right, well, let's look back at the market and see what the single stocks are doing. Then I'll let you guys get out of here. Unless you guys have any questions, put them in the comments, or unless you guys want to chat, put them in the comments. But otherwise, I really think you're going to like this SPYT video. It's involved. I have like 15 slides. I probably made it too big. It's one of my more technical videos in a while. I got a comment yesterday, probably from somebody that's watching now, and I'm not throwing shade at them, but they asked me to, and I get it. They asked me to make some shorter videos for ADD or something. And I have that problem too. I have a hard time concentrating through long videos. So I know what they mean. I'm working on a short video that's going to be less than 15 minutes long. That's going to compare some funds. That's going to be real, that's not going to go in depth. But anyway, this next video I'm making on SPYT, there's no way to get around not going in depth and examining how they, because they're just, you have to give up something to get something. And these funds just do it in a little different way. There's no way not to get in the weeds when we talk about it. All right, so here's Coney. So gosh darn it, I didn't see retire on dividends this morning. I hope they may have another, all of these are with the caveat that some of this data, I try to make it right, but sometimes it's delayed. Sometimes I find out the next day that they put a new strike out there, but I'm just trying to study the general trends on these other stocks. I think it's fun to look at. Misty's been a blast to look at. Not lately, but I mean, for a few weeks there, is incredible. But it's bouncing today. Like I said, this started, this, I'm saying this is the smart money now. This started the bounce. But anyway, if this is what smart money is doing, what that tells you, it's just like if this is ahead by a day or something, that tells you that probably the bounce is going to peter out, the bounce that we've had today. Anyway. But anyway, they're at the prime location for this one strike. But they have 4 other strikes. I'm sure they would much rather be, like I always say, ideally you want to be at the top, at the top line and the top strike. So they have a lot of capital they could still capture. Let's see. At least these have kind of turned around and gone back the other direction, though. Look at old FEPI's. FEPI does have a parent. It's not the NASDAQ. I always show the NASDAQ because it's easier, but FEPI's benchmark is up 1.87 today. That's good. I mean, that's probably about what FEPI's up because I think they just follow that index. FEPI is 1.22. Okay. Well, the difference is tracking error. They should be up the same, but sometimes for various reasons, they aren't. Maybe they haven't rebalanced in a while and it's growing out of one leg's growing out of proportion. That's probably what's happened. All right. VIVIX is down, which is good. VIX to VIX. Of course, that's what we would expect because the market's bouncing. What you want to watch out for is when VIX of VIX is going up and the market's going up at the same time. Lots of times that's a precursor of something bad about to happen, but this is what you'd expect. Volatility of volatility. It's ticked up though. We were under 80, which is really calm waters. But now the waters have, the swells have picked up out here a little bit. So we'll see. We'll see. What do you guys think? This latest bounce, let's just pull up NASDAQ, 24-hour chart. Gosh darn it, look at that thing. Well, that's, hang on. Let's pull up NASDAQ cash. That's almost unfair to look at. My futures are still delayed 15 minutes. I want to pull up cash because the cash is live. It's the same though. My goodness. Well, this should be a big day for all the funds. I bet that SPYT price situation corrects by the end of the day when the arbitrageurs get to work, and they have spreadsheets too. And the strategy should not give up much on a day like today. I mean, we know how much it should give up. It should give up the strategy made 6, so it risked the inverse of 6 and 15, so it's 8. So it risked 8, so it's given up 8 points. So yeah, so it gave up 8 points. Now this is NDX. Let's look at SPX to be fair. I love talking about this kind of stuff. I hope that you guys there's still people listening. I bet Tom's still listening, but anyway. But so this index, it gave up 8 points. The 8 points are gone. Well, if the market goes up, that's the tax. It just pays its tax when the market goes up. When the market goes down, this strategy doesn't actually earns, that's then when the strategy kicks in or whatever. But so on a day like today, the tax is kicked in. So that's what I'm saying. If we're going to have to pay the tax anyway, it tax is a flat tax. The problem with JEPY, and I love JEPY, their taxes just give us all your money. Their taxes like the taxes in England. I don't know. I used to hear that the tax in England was 97% at one point in the 70s. And that's why all the music stars, Led Zeppelin and everything, either moved to France or New York City. They had to relocate the Beatles. They can't, because it was literally 90, where basically you paid all your, in the upper echelon of society, you were supposed to give all your income away. Anyway, that was a long time ago, but let me know in the comments and you guys remember that. But in any event, this thing is just absolutely on fire. But who knows? Maybe you never know if this is the false signal. Then by tomorrow we're down. Lots of times the market's super choppy. And it's basically what we've been doing. Like this day, you would have thought everything was great when we opened way up here, never to get any follow through, and boom, by the end of the day, lose it. That's a sign of that, that's a harbinger of things to come. Too bad we couldn't know that before it happened, but after it happened, you're like, oh yeah, I guess we're kind of weak. Well, then what kind of confirmed that is there was a counter trend like there always is, and it came back to the middle line basically. But it came back, but it didn't get back out of the Bollinger Bands on the top side. So it came back, and then boom, sure enough, it went back lower again. But then when it got out of the Bollinger Bands on the lower side, it wasn't interested. They didn't get any follow through, and it comes up here. Now that move looked like a dead cat bounce at the time, because then the next morning it opened lower and went lower, but they didn't get a whole lot of momentum lower, and so now we're ripping back the other way. This kind of action can be hell on an account if you're trying to trade it. This is a definition of whipsawy. In any event, all right. Well, I can stop rambling. I'm going to check the comments here in a second, but let's check NASDAQ real quick. But it looks like everything's in good shape. It looks like all we have to do is just hang on until the end of the day and we'll be set. Hopefully none of us have any short any of these inverse funds today, because it would be ugly. Russell actually the weakest of all of them today on a comparative basis, but it is still out of its Bollinger Bands and giving confirmation of a trend. And so it's also trying to trend. Russell has a lot of ground to make up. They still have a huge open gap, of prices that haven't traded in a few days. We'll put a line in right here and we'll keep an eye on this line. How about that? Let's see. Then I'm going to keep an eye on this. This line will be a good over-under line. So if it'd be bad for the Russell, and probably want Russell puts for next Friday, or sell calls. But anyway, some combination of that. If the Russell can't establish back over this, it'll probably go right back up to it and test it. But if it can't establish back over it, of course, then you go in the direction of the gap until it can establish back on the other side. I mean, that's the rules. Okay. Like here's an example. All right. So it goes down here and then the day ends. Then the next day way opens down here. So that left a huge open gap to right there. Well, look, what does it go to? 2 days later, it goes almost to the tick to right there to the gap. It fails. The next bar, it goes the other way. And the next bar, you get followed through. You could call that, confirmation, and you could easily buy puts there and for a few days later. And that would have been a nice trade. But then on the downside, if you want to play momentum, if you would have waited until it broke down, and then waited till the confirmation bar. And I do that a lot too. Then you got a confirmation bar. If you would have got puts there, that would have been the worst possible time to get puts. And I've done it a jillion times. But in any event, so today's action right here. So here's what I'm saying. I'm saying this sequence right here, where we came up and then filled to the tick, filled the gap, and then ran the other way. I'm saying I'm using that as a model for what could happen here. So I'm saying IWM, Russell, puts for next week or sell call spreads for next week or something, unless it can get established above here. Not financial advice. I'm certainly not taking that trade, but it'll be fun to look at. If I just had some money to gamble, but there's just better things to gamble on. There's better things to gamble on. I think if I just had some money to gamble, I might take NVIDIA calls. I mean, let me know what you guys think. Okay, I'm going to check the comments this time, then I'll let you guys go. Gambling's not what you're supposed to do. I mean, Thomas is saying yeah. Max is buying now daily spreadsheet. Okay, yeah, perfect. Thomas, that'd be great. I'm starting to keep it, but past like 2 days ago, I don't have any data. But I would love to if I could get some old data because I could maybe. I'm going to clean up mine and make it look better, and I'm just trying to figure what to track. There's so many things you can track. I'm trying to. Well, I look because everything is everything has an opportunity cost for you. You have to give up something to get something. So I'm trying to compare the opportunity cost of having a fund like JEPI or like JEPI that's 100% capped versus the opportunity of having one that's not 100% capped like some of these others. I'm trying to make a metric, but that's fair, that fairly can weigh both of them. But anyway, I'll be anxious to see what you come up with, Tom. The spread you're talking about is SPYT, yeah. Yeah, probably not. I don't know. All right, guys. Well, there's 12 of you watching. I appreciate each and every one of you guys. Remember, not financial advice. I'm going to get back to work on this long video. Hopefully you guys will watch it. You guys will be the type that will watch it because anyone that's watching me on lunch is going to watch this. So it's going to be out soon. I'll give you guys a sneak peek. Look how many why SPYT, the unholy trinity. I talk about a lot of the stuff we talk about every day about JEPI being fully capped. I go into the math behind it. It's going to be kind of then I talk about what we're just talking about on a down day, what happens versus on a bullish day. That's when they kind of pay their taxes on a bullish day. They pay their toll. They pay it every day. It's just, but it manifests itself on a bullish day. Anyway, you guys will like it. I even got a comment from a subscriber, and he asked a question, and I put his question in there, and I wrote some answers to what he said. I can't wait to show this to you guys. I talked about reverse splits, and I projected some reverse splits in the future. And anyway, all right, guys, I'm going to let you guys go. You guys have a good afternoon. Be looking for this video. I'm going to make sure that there's no comments. All right, guys. You guys have a good one.